Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 22nd of March, 2023, guys. So, yep, welcome to this Wednesday's morning session. The usual one, which we have at around 7 o'clock GMT time. So, yep, I hope you're all feeling nice and fresh in the morning. You're all feeling nice and relaxed, from yesterday's day. So and now let's jump into this one, guys. So now, before we actually jump in further, we need to quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. So I'll give you a few seconds to read the rest. I'll just kind of disappear here for a little bit, and yeah, we can go from there. Okay, guys, so I'm back. Now then, before we jump into the charts, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. So, let's have a look at the charts. Oh, and by the way, of course, today, guys, we have a very interesting and eventful day. Or at least I would say it could be a quiet one during the European session, but the whole excitement could come later on during the US session when we'll have the interest rate decision from the Fed. Now, look, the economic calendar currently sits as yes, we do have some data coming out before that, but if let's say the highest importance one, the most important one. Oh, and by the way, I can see that the UK's numbers came out, so just bear with me one moment. Where is that? Okay, let me just double check on the other calendar here. I think that the UK's not in. I think it was inflation. Yep, inflation came out. So yep, that beat the forecast and the previous numbers as well. So basically, today, let's put it this way. There we go. So today's inflation rate, so the year-on-year number, it came out at 10.4 against the forecast 9.9, and of course the previous one was 10.1. Now, I can see that the month-on-month number as well came out much higher than the forecasted, and not to mention the previous one. So yep, the headline, basically the headline inflation numbers, and together with the core ones, yeah, they're all beating everything here. We'll have a look at the pound. We'll have a look how it's performing. But of course, the main excitement, the main thing to watch out for today is the Fed interest rate decision. Now, let's have a look what's happening here, guys. So the Nikkei 225. Look, yesterday Nikkei was closed. They had a public holiday, but the futures were moving, and yeah, of course, they moved to the upside together with the rest of the indices. And yes, look at this. I mean, we pushed back above that 27,000 territory, and what I said before, that if we do climb back above that 27,000, I am gonna aim for these EMAs. And look at this, perfect hit, boom, wonderful. What can we do next? Now, at this point, I would say, although I am kind of leaning a little bit more to the upside right now, however, due to the fact that today is a very exciting day, so it's a little bit extraordinary, so that's why don't kind of rush into any judgment yet, because look, what I would say here is that we might see, let's say, a continuation moves to the upside in general across the some indices. Or if, let's say, the traders decide not to participate in anything until the Fed decision, then we could see just maybe slight retracement from yesterday's big move, across all the indices. Maybe a bit of a retracement, small one or something like that, or basically just stalling around the same place. But yeah, just we would kind of go into the same thing, that we would remain kind of maybe neutral until the Fed decision. Now, again, with the Fed decision, well, currently we have the expectation for a 25 basis point rate hike. So according to the Fed tool watch, 86.4. Yep, that's the one that we have here for the 25 basis points. Again, will that be the case? Let's wait and see. I think that the way the market is shaping up right now, I think that we're scrapping the whole zero. I think the 0%. Again, it would be a very big surprise if okay, I'm not gonna say that it's for sure, but it's gonna be a very big surprise if they're gonna not increase their interest rates. Why? Because look, we have the stock market rebounding. We had, even with the whole negativity around the banking sector, we're having the stock market rebounding again, and in a way that's not what the Fed wants. The Fed wants lower inflation and spending to go down a little bit. So in general, basically the stock market going down. So that's why I don't think that the zero option is the zero rate hike is on the table. Again, if this comes out, that would be an explosion probably here in the stock market. That we could see a nice, good, strong rallies to the upside, but as I said, this is not what the Fed wants, so an increase of 25 basis points could be reasonable, just kind of in line with everything. But yeah, if, let's say, the stock market somehow continues to rally today, all the way up until the meeting, the 50 basis points, that would be, I would say, a bit of a shock. Again, also because there are already critics coming out saying like, hey, maybe it's, we don't need a rate hike right now because the economy is just, it's suffering currently. Well, it's always suffering, but hey, it's currently suffering more. But maybe the rate hike in general should not take place. So that's why 50, I think, wouldn't. It's a little bit too much. However, if we really want to bring the market down, yep, that's the way to go. But that's why the 25 basis points is in the sweet spot. And yeah, according to the Fed Watch tools, this is the one to watch for right now today. But again, instead of like speculating for all that, about all that, then let's probably just wait and see what's gonna happen, and then do something about it. But at this point, like I said, I'm gonna be just observing the price action in everywhere, and then we will see how we can position ourselves later on today, or especially tomorrow and Friday. Now, coming back to the charts, yep, but like I said, if from the technical perspective, look, what I'm gonna say, what I'm gonna say right now about all the instruments, it's kind of in the world, let's say, as if it would stay as it is right now. However, I understand that we have a difficult moment today, but hey, the technical picture right now at this point looks that if we do cross above all of the EMAs here on Nikkei, there is a chance that we could see a further move north here. So that's why what I'm gonna do here is for now I'm just gonna observe this one, but if we do cross all the EMAs and jump above them, then I'm gonna get a little bit more excited with the upside. Now, ASX 200, just a quick update on this one. Look, I talked about this one as well. I said that, hey, we could see, a nice little retracement, and so far we're getting that. So my little retracement is all the way up until here, maybe up until this 200-day EMA area. Not exactly that one, but the area. So the area is around that 7,100 zone. So I'm keeping a close eye on that one. If we clear it, I'm going to go towards this downside resistance line, taken from the high of the 4th of February. Because in general, don't forget that any move, any pullback to this trend line is kind of classed as a temporary correction before another possible leg of selling. So just keep that in mind. In terms of getting a little bit more comfortable with the downside, I would rather stick to something like this here. If, let's say, we don't move straight away to this area, I would probably just keep an eye on the 6,917 in order to get a little bit more excited with the downside, because a nice good drop below it could attract a few more sellers into the game. Because again, look at this, it played out as fantastic area of support recently. Yes, we had those breakouts, but those were false breakouts, so that means that, hey, we could see, if it drops and stays below it, then, well, further declines are possible. Now, jumping into Dow, just a quick update. We're stalling. Yes, very good spot to stall, to be honest. I mean, look at this. I mean, we are trading near this downside line. So, again, so far, so good. But of course, it doesn't give any clarity to any of the sides, neither the bulls nor the bears. Okay, we pushed above the 32,687. I talked about this, and I said that if we push above it, I'll aim for this downside line. Well, we got a break here yesterday. It's just a little territory, but hey, in general, the idea worked out. I mean, I get it. It's very, very tight here, but hey, what the only thing is what you can, which probably can keep an eye on right now is, let's say if we also break this downside line and then we cross above all of the EMAs here on my daily chart, that's where I'm going to get a little bit more excited with the upside. So keep your eyes on that one. Then of course we have a bunch of other targets to keep to target. 33,591 zone right here, marked by the current highest point of March, and then so on and so on. But that's in case of the upside. In case of the downside, well, this is where I'm going to take a very conservative approach here. I don't really like this whole area here. Yes, if we could see a drop, okay, I mean, that could, clear some, clear the road to some lower levels. I mean, if you are looking for something, probably maybe you could keep an eye on the high of Monday. Let me just adjust this very quickly. So you could keep an eye on Monday's high near the 32,555. A drop below it may attract a few more sellers into the game. But again, this could drift lower, and we could test out probably something around here, this upside line. So, yep, there we go. So we could test this upside line taken from the low of the 15th of March. Now, again, this upside line is a little bit on the tentative side, so don't really put too much emphasis on it. But it could still play out. So, in other words, from the very, very short-term perspective, look, if we do drop below this area, below that 32,555 territory, then I'll consider a move lower. The only thing is that my problem with this area is the fact that, let's say, if we do drop below it, yes, we could move lower, and we might not even test this upside line. Actually, we might, see a hold up even somewhere around. Let me just grab another line here. We could find some support near this inside swing high of the 19th of March, near the 32,310. So look, we do have a bunch of obstacles. So that's why my downside scenario is not preferred from here. It's actually from this area. But again, I do understand from for those day traders, maybe this is a bit of a wait. So you want to capture something earlier, but in that case, do accept the fact that it could, let's say, give you a false breakout and then reverse sharply back to the upside, and then this way the market kind of takes you out, and that. So you're probably not the first day in trading, but yeah, just kind of have your stop loss in place, and only risk what you can afford to lose. That's the main thing that you need to go in. And I think that the psychology that you go in all the time is kind of, let's say, I don't know, let's say you enter a market and you have to kind of, let's say, have in mind that, hey, that's gone, that's gone. And in a way, you need to kind of limit your exposure in the market in general, unless you are a swing trader. Maybe you're trying to capture something, but hey, it's up to your strategy, whatever, guys, whatever you feel comfortable with. But it's just what I'm saying in general. Look, try to protect yourself as much as possible. You'd rather go for a smaller profit than something big. So just kind of keep that in mind. The German index DAX. So yeah, looking at this picture here, we had a nice push. Look, this is the one that I'm looking at here is the futures. So you might have slightly different pricing on the cash index And so basically, the futures here are pushing nicely to the upside. Look, I'm going to stick to the futures because, again, this is what I was covering for quite a while now. So just yeah, I think it's going to be easier a little bit. Now, we're pushing back above this 15,300 and 415 territory. We pushed above it, so in a way it kind of opened the door to some higher levels. And what I said previously, and I'm going to stick to that, so I said that if we continue to trade above this hurdle, I'm going to aim higher. If we fall back below it, yes, there is a chance to rebound from the 50-day EMA, but at the same time, we could break it and move to the downside. So that's why my upside scenario so far is working out. We are clearing that 15,315 territory. So yep, my next target is the 15,500 on the futures, and then maybe the 15,700. But let's wait and see. Let's see how that's going to play out, guys. The dollar index. So of course, something that we are watching very carefully. Now, this is where the interesting bit comes in. So look, I mean, I talked about this since when? Since Wednesday of last week. I said to you, hey, maybe we're forming a possible bearish or let's say a falling wedge pattern. There we go. We could be forming something like that, and it seems to be the case so far. Now, what I said to you previously, that if we do drop below the 50-day EMA, I'll aim lower. I'll aim for this 103.05. Boom. Mission accomplished. Now, what I said to you after that, I said that if we do drop below the 103.05, I'm going to aim lower. So far, we're going in that direction. Now, my arrow is drawn here all the way kind of towards almost to this lower side of the falling wedge. Now, I don't want to say anything, but look, the timing could not be more perfect for, this wedge, because again, if the Fed goes, talks about how aggressive it is, and we need to still continue hiking, and this might boost the dollar, and this might boost the dollar to the upside here, and we could break this down, this low upper side of the falling wedge. And according to all the TA rules, as you know, these patterns tend to break to the upside. Specifically, this one this breaks to the it tends to break to the upside. However, a confirmation break of the upper side of the falling wedge would be needed. So what do we have here right now? We have a wedge where we have an instrument where it's still trading in the wedge. So in a way, as long as the boundaries remain intact, it could still drift lower. So that means that, hey, at the moment, as long as as long as we stay within the pattern, we could still drift lower because the trend is to the downside. However, once we start clearing this, let's say, upper side of the falling wedge, yes, this is where the whole excitement for the bulls could come, and we could see this one traveling to the 50-day, 100, or even the 200-day EMA. So keep that in mind. Now, jumping into gold, look at the retracement we had here. I mean, of course, the market yesterday was in positive territory, and kind of no need for gold anymore, right? However, look, what I talked about yesterday was that if we stay above that 1960 territory, somewhere around here, I'm expecting a bit of a retracement here and a push back up. So if we start falling and below it, that's where it could become a little bit more exciting, and we could target some lower levels. Then I said that I'm going to aim for this 1935-37 zone area. We got that. So far it's working out according to the analysis which I provided yesterday. So we fell below the 1960, we stayed below it, and this is the drift we're getting right now. So the question here is, can we see a further drift lower? Now, well, this is going to be interesting, and to see how this is going to play out, because if the dollar pops and the indices drift lower, which way gold will go? Because I mean, on one hand, it should go lower. On the other hand, if the dollar goes higher, and then yeah, gold should go to the downside. We might get we might get that. Look, in a way, I'm gonna draw my favorite Fibonacci's right now. There we go. So let me just adjust this very quickly. Extend to the right, and yep, let's put it here. Now, so far you can see that we've done that 38.2. So okay, we maybe not exactly the hit here, but we have to take that because this is a good result. Now, what's going to happen next? So if we clear this area, this whole territory, yes, my next target is the 1914 or 15 territory, approximately around here, or even that 50-day EMA. So this is what I'm going to be targeting if we do fall below this area. However, again, like I said, we have the Fed today, and if by any chance we start climbing back above the 1960 territory, well, maybe we could go back and retest the psychological 2000 mark. Look, because as you know, here on Monday I was talking about this. So in my morning video I said, look, while I was talking, we were actually already hitting the 2000 mark, and then my target, the 2009, because that's the high here of the 10th of March of 2022. So worked out perfectly, and then we drifted back to the downside. So now the question here is, like I said, can we climb back above 1960? If we can and we stay above it, then great. I will go a little bit back to the upside towards that 2000 mark at least. If that gets clear, then of course we could go higher, but if it falls below the 1937 1935 area, well, this is where I'm going to aim for that 50-day retracement, or at least initially for that 1915 zone. So keep that in mind, guys. Now, jumping into oil very quickly before I jump into Ripple, by the way, which I have it in my heading here. I want to talk about it because it's quite interesting. Oil, yep, beautiful rebound. Look again, look at this. I mean, this area, the 66.12. Look, I mean, this area is the low here of the 20th of December of 2021. Now, I talked about this, and yeah, we had another. Well, on Monday we had a nice falls breakout here again. Yesterday we retraced back up, so great. So, in a way, once again, we came to that psychological 70 territory and tested it from underneath. Look, I think it's time, actually, I don't know why I didn't do it earlier, but I think we need to mark it. I think that this is quite an important level to watch. So yeah, the 70 territory, the psychological $70 mark is somehow playing out nicely. As long as we stay below it, I'm going to continue aiming to the downside. If we start pushing above it, well, this is where the interesting bit comes in. Yes, I am going to aim a little bit to the upside if we do push above the $70 mark. But then I will consider a test of this steep tentative downside resistance line taken from the high of the 7th of March. Again, but if that gets cleared, this is just seen as a temporary obstacle here for the bulls, then yes, I will aim for this upside line, which got broken last time. So if we break this downside line, we will go for this upside line here to test it from underneath. And as you know, I've mentioned already this in my previous sessions. Basically, I said that whenever we break a trend line, there is a tendency, maybe not straight away, but some kind of, I wouldn't say most of the time, but there is a tendency to come and revisit it from either underneath or above, because it depends on which one you're gonna break. So in this case, yeah, we could see a revisit of this upside line, but again, for that, some criteria have to be met first. So one criteria is, of course, the break of the psychological 70 territory, then a break of this downside line, and then we could go a little bit higher. But while we're trading below the psychological 70 territory, guys, this could be the case. We could still see some downside. Now, Ripple. Okay, Ripple. Beautiful explosion to the upside. Look, I talked about this. I can't remember. I think it was yesterday, or actually, yeah, I think it was yesterday, or on Monday. But basically what I was saying, like, look, from the technical perspective, not to mention what's happening right now in the background from the fundamental side, but from the technical side, I said, if we pop above the 0.40 territory and we clear that 200-day EMA, I'm going to go higher. Well, actually, I was a little bit on the modest side, and I was aiming only for the 0.4331 here. Well, we got my target. Okay, great. We actually exceeded my target twice. Yeah, we cleared the upper side of the rising channel. Okay, all good, all looks fantastic. We're now getting a little retracement, and look, from the technical perspective, again, if we stay above the upper side of this rising channel, then yes, I will continue aiming to the upside, where my next target will be this one right, not this one, but this one right here, the 0.51 zone. Then it, of course, is the 0.5485 and the 0.5590. Let's put it there. So these are going to be my next targets if we stay above the upper side of the rising channel, guys. But of course, we are watching the whole saga, with the continued saga with XRP versus SEC. Now it seems like we are getting closer to the result or final verdict on what's going to happen. So I don't know if you were following or not following. So, you know, SEC accused Ripple about the fact that, you know, they were selling Ripple not, I mean, they were selling it as an asset, but they didn't declare it as an asset. So, you know, you can have a read about that online. There's plenty of information, but in general, that's kind of in the nutshell. So now the question here is what's going to happen if the SEC, if the judge rules out that the Ripple should have been classed as an asset. Well, that's actually not going to take a hit on Ripple only. Well, it might take a hit on all other cryptos, by the way. So if you're a holder of other cryptos, just be careful on that one, because again, then the whole kind of issue will go into case by case, or like company by company. So for example, you know, then we'll say one company might say this is a currency, but cryptocurrency. The other one will say actually this is an asset. So, you know, it's gonna go this way. So it's not gonna be just kind of one thing across everything across the whole. But on one side, if they rule out that this is an asset, then yes, a lot of damage could come into the crypto world. However, if to kind of think about the fact that you know, governments have already been thinking about how to regulate this, I think that this could be a good first step towards, you know, those regulations and you know, imposing those regulations on the crypto world. So just kind of keep that in mind. Keep that in mind, because again, maybe I'm being too pessimistic or anything. Maybe I'm missing out on something, but just kind of again, I'm here to kind of throw out these ideas for you to digest and kind of build your own opinion on everything. But like I said, this is what you need to kind of keep in mind as well. So keep an eye on the verdict, what's going to happen. Just see, you know, then, because it could have its knock-on effect on other cryptos as well. So if everything goes out well, if it's not an asset, hey, great, you know, we could see cryptos maybe flying and, you know, pushing nicely. But if it comes out as the verdict comes out as that it's an asset, well, again, Ripple might take the hit the most, but I mean, some others might take the hit as well, but again, depending on the company. So you'll have to just keep an eye on that one, guys. Akram256, I can see you there in the chat room. Hello to you too. Hello to everybody else, of course, who's joining in. So, you know, I hope everybody's having a wonderful start of the Wednesday. So yeah, guys, like I said, that's the situation with the cryptos for now. From the just purely from the technical perspective, yes, it looks bullish. However, you need to consider that fact as well, the one that I just said. So keep your eyes on the news, on the verdict around the, you know, the Ripple thing, and then we'll go from there. Now jumping into a few pairs, guys, very quickly. AUDUSD. So yesterday I talked about this one. Look, I mean, this is quite interesting because again, what I said, that if we might see a retracement, we might test the trend line from the other side, which we broke recently, and this is what happened. Beautiful. Okay, wonderful. So now what's next? We're getting that retracement in a way, but again, the problem which I have right now is that if it would be a simple day, I would say I'm cautiously bullish, because again, we are still above the downside line, the upside line. So in a way, actually not even cautiously bullish. I would say I'm still bullish about this. But because it's an irregular, unusual day from the economic calendar perspective, economic events perspective, that's why you need to be cautious, guys. I mean, for now, I would say yes. Look, it's we could get even more bullish if we do pop above the 0.6730 territory right here, which is the current no, that's the current highest point of this week. If we clear it, great, we could go higher. But if we start breaking this to the downside, we fall back below all of the trend lines here. Now that's where it could become a little bit more interesting for a few more sellers. NZDCHF, guys. So look, so far so good as well. From the technical perspective, as I said before, when I was covering this one, I said keep your eyes on this downside line, which could provide resistance, and so far it is providing resistance. And what I said to you previously then, that if we fall back below the 0.5745 territory, I'll go a little bit lower towards the 0.56 or 57 zone initially. And if that gets clear, the 0.5664 is my next target. Well, so far, we did kind of half of that. We did get a nice test of the 0.57 territory. So look, so 50% of this idea worked out. We're now retracing back up, but we are still staying below the 0.5745. If we continue to trade below it, I'm going to continue aiming to the downside. If we start pushing back above it, this is where I'm going to take a neutral stand, because again, we're getting closer back to this downside line. And let's say if we do get back to this downside line, well, then there could be a I would say basically just sorry, I started reading the message from Akram256, but yeah, sorry, just stalled there. But look, I'll get to that point. Look, in here, the reason why I'm going to be neutral here, because look, we are getting back to this downside line. That increases the chances for another, like for a breakout of that downside line. And another thing that would support the upside scenario would be the fact that we kind of formed a higher low. And we're kind of, it seems that we're getting ready for a higher high. But again, certain criteria would still need to be met. So for me at this point, to get excited about the upside, is the push of the 0.5826 territory would be required here, and then I could go higher at this point. Yes, I will start looking at some higher levels if we do push above the downside line, but to get more excited about this idea is, yeah, I would like to go above this barrier first. In terms of XRPUSD or gold, Akram, basically, yeah, sorry, I mean, I'll have to continue, but you can rewind quickly after the video gets uploaded, and yeah, you know, you can go from there basically. So just, yeah, but thank you for your comment. Look, USDJPY, this one's interesting. Again, to be honest, I'll say it this way: all of the currencies, all the instruments are going to be quite interesting after the Fed decision. At this point, we're just observing what could happen, you know, how we could, you know, position ourselves here. But look, in general, we are breaking from the technical perspective here on USDJPY. We're breaking this downside line. In a way, there could be a push higher here towards the EMAs here, at least the 50-day EMA. But then, yeah, if that gets cleared, I will get more excited with the upside. So something like this, I would be considering. So in other words, look, for now, if we do push above this territory, above the 133.55, and we push above the 50-day EMA, yes, I'll go higher. I will aim for the 200, the 100, which currently coincide together. And then if we clear the 135 territory right here, guys, I mean, that's where the whole interest could come in, and yeah, we could go a little bit more to the upside. USDCHF, just a quick update on that one as well. Look, I'm talking about this. Have to admit, USDCHF didn't really work out as planned. However, partially didn't, partially did. Why? I'll explain. So in the beginning of this week, I talked about this idea and said that, hey, we could be forming a nice bullish flag here. So, which is still on the table. However, yesterday I said that if we do drop below the 0.9230 zone, somewhere around here, this increases the chances for this pair to move a little bit to the downside. But we did move lower, but now you're seeing a bit of a push back up. So in a way, that means that this level is actually not really worth it to watch. So probably I should stick to my original level, the 0.92 zone here. If we do fall below it, I will go lower, because at this point, look, I mean, we could be forming something around these lines. So yep, something like that. So basically, then you can see that yes, it's a falling channel right now. As long as it remains inside the channel, the trend is to the downside. But because on the bigger picture, well, not a bigger picture, but slightly bigger picture, if we include this candle here as well, we have ourselves a bullish flag. For that, to kind of bullish flag means that yeah, a breakout to the upside is possible, but to be honest, I would stick to the 0.9342 territory right here, which coincides with the 100-day EMA, just to be a little bit more on the safe side. And if we clear that, then yes, I could go a little bit more higher. For the downside, like I said, yeah, drop somewhere below the 0.92 zone could be ideal. USDCAD. Now, this one's interesting. This is something that I've posted here on TradingView yesterday. So for that, I need to jump into a 4-hour chart. Look, what I talked about this here. This is kind of the breakdown in general, how I'm, doing this approach here. Because look, we had yesterday, before this, huge spike here to the upside. Look, I said to you that if we're kind of forming a possible descending triangle, which according to all the TA rules tends to break to the downside, but a confirmation break is still required, and that is a confirmation break for me would be somewhere below this 1.3650 territory. Then if we clear that, then yes, my downside target TP1 is around here. Yeah, let me just, my OCD is kicking in because this one's not capital letter. There we go. Now it's much better, and now we can work definitely for sure. Okay, look, this is my target, target 1 and target 2. My target 1 is around the 1.36 zone. My target 2 is around the 1.3555 territory. So, but for that, in order to aim for those levels, I need a clear confirmation break. Now, at this point, what I'm seeing here is that, hey, we had a rebound, a strong rebound from the lower side of the triangle, and we pushed higher. We kind of violated a little bit the upper side of the triangle, but we drifted back below it. So on a daily chart, for example, you can see it clearly. So yeah, we violated it, but we're still kind of slightly below it. Now, the bulls are hoping to see here a bullish flag. The bears, well, the bears are kind of hoping to see that this is going to continue to be a bearish the descending triangle, and we could see, a breakout to the downside. But look, at this point, I would say we're closer to the upper side of the triangle, and if we can, if we somehow push above this upper side, and then we stay above the 50-day EMA, to be honest, then yep, the upside target 1 becomes an interesting one. The 1.3750 is becoming an interesting target to watch. So, and then of course, if we clear that, then we could go a little bit higher. So just keep an eye on that one. Jumping back into daily chart and GBPUSD. So, yeah, we had the inflation numbers coming out. We're seeing the pound against the US dollar pushing a little bit to the upside here. We're kind of coming back to this 1.2270 zone. Let's see if we can clear it. Look, I mean, I'm still gonna stick to my analysis, the one that I talked about in the beginning of this week. I said that, hey, look, overall we're in the range. We were kind of last week I talked about this one as well. At the end of last week, I said that we're currently sitting still above the the midpoint of this range, above all of the EMAs. So in a way, this could be seen as a positive. So initially, I'll aim for that 1.2270, which we've managed to reach, and now my next target is the 1.2444. If we clear the 1.2270 zone, if we do that, then yes, my 1.2444 is my next good target to keep an eye on. So let's see how that's going to play out. However, if it falls back below the 1.2114 zone or below all of the EMAs, guys, that could be a door opening towards the lower side of this range. GBPUSD very quickly on that one as well. So yeah, look at we're getting a boost. So before the news came out, we were declining a little bit here, but hey, we're back to this highlighted zone. Yesterday we violated it, but somehow we stayed just kind of in the zone. Not really, okay, cautiously bullish, I would say. Not very strongly bullish, but cautiously bullish. And look, if we do push again above this and stay above this, I'm going to aim higher. And my next target is going to be 1.8760. So yeah, so let's keep an eye on this one. At the moment, yes, Everything's kind of leaning towards the upside. However, let's see how this is going to play out later on today as well, because again, what I don't want to see here is basically a double top here forming, and then you look. If that's the case, I mean, if this continues to provide resistance, this whole red zone provides to resistance, then a drift back down could be possible, but I'm not going to do anything until we see a drop below the 1.8078 here, right there. If we do drop below it, then yes, this is where I'm going to consider a larger correction to the downside. EURNOK, just a quick update. I'm not going to spend too much time on this one because, again, I do like to look at these exotic pairs sometimes, because in yesterday I mentioned this one. I said, hey, heavily dependent on oil. What happened with oil yesterday? It rallied, or should I say, pushed higher. And what happened here, EURNOK? It drifted lower. Why? The Norwegian krone got stronger, and yes, we saw a nice decline here. Look, I talked about this and I said that if we fall below the 11.37 or 38 territory, somewhere around here, and we stay below it, I'm gonna aim to the downside. So far I'm doing that unless we somehow sharply push back up, but again, for the upside I need to see a break of this barrier above the 11.48 zone. For the downside, yes, as long as we stay below the below this area, below that 1138 zone, yes, I'm gonna go further south. EURGBP. So yeah, EURGBP, a roller coaster ride. One of my unfavored pairs. I mean, probably the most unfavored pair, but to be honest, but still look at it. Have to look at it because again, although it's one of my unfavored pairs, it's still an interesting one to watch. But look, at the moment, we got a nice rebound from that 200-day EMA. I talked about this yesterday. I said, like, if we do rebound from this area, we could go back up. We could go back to this 100, 200, 100-day EMA, the 50-day EMA. We got that. We're now drifting back down. So it has a kind of mind of its own. But look, I'm going to stick to the downside for if we do drop below the 0.87, 1820 zone, somewhere around here. For the upside, I need to see a push back above the 50-day EMA, and then we'll consider a larger correction to the upside. And finally, EURUSD, guys. So we reached my target. My target was around here, the 1.0760. We haven't even managed to clear it. So now we violated the territory, and in a way, I would say it's no longer valid. What's going to be valid here is to remove all the drawings and kind of have a fresh look without the lines, because so far, so far it's doing a nice thing here, staying above all of the EMAs in my daily chart. So that's what I said before, that as long as we stay above those, I'm gonna aim higher. So yeah, as I said, my target got reached. This one was right here near the 1.0760. We cleared it. We're currently above it a little bit. Now the next target here, of course, is this one right here, the 1.08 zone. Again, we're very close to it, guys. I mean, I do understand maybe not the most exciting target, but hey, if we continue somehow to trade above the 1.0760, I will then aim for the 1.08 zone. If we fall back below the 1.0760, I'll take a neutral stand. However, if we start falling below the EMAs, here the 50-day EMA, I'm going to start looking at some lower levels. Then, of course, these targets start coming into action. But again, let's not rush into anything, guys, for now. Yeah, if we do push or we do stay above the 1.0760, I'm going to aim for the 1.08. If we clear that one, my next target is the inside swing low here of the 2nd of February near the 1.0885. That's going to be my next target, and then we'll take it from there. If we clear it and we go, you know, sky high, okay, that's fine. Look, the ideal target here still remains the highest point of February, but okay, let's wait and see. Let's wait and see how today's day is going to play out. But again, for the downside, as I said, drop below the 50-day EMA here somewhere might do the trick. If you think that you could be missing out on the bit of territory right here, well, again, from the very short-term perspective, in a way, yes, you could keep an eye on this little territory, the 1.0727, but again, have your stop loss in place, guys. I mean, that's really it's a tricky one. It's like, to be honest, it's still, you know, at the end of the day, it's still gambling. So try to protect yourself in general. But look, at the moment with the downside, ideally for me is, like I said, it's a drop somewhere below the 50-day EMA, and then yeah, we could go from there. But if you think that you could be missing out on this territory right here, try to check the 4-hour chart. You know, maybe, like I said, maybe this could play out nicely here. Maybe, yeah, actually even the 1.0730 could be 31 could be an interesting level to watch. But again, let's not rush into anything today. Let's see how it's going to play out. But I'm cautiously bullish on the euro dollar at this point, because again, from the technical perspective. However, if USD, if DXY pops strongly to the upside, guys, well, expect euro dollar to decline nicely. Okay, guys, so I hope you found this useful. Thank you very much for tuning in and watching this one till the end. I really appreciate, guys, your views, your likes, your comments, everything. Honestly, that you cannot imagine how it helps. So really appreciate that. Thank you very much for sticking around till the end. Who stuck around till the end? But thank you very much, guys, for your time. Join me tomorrow morning, as always, at my daily pitch international with easy markets at 7 o'clock GMT time. We'll have a look what has happened to the market after the Fed decision. Yeah, look, stay safe, have your stop losses in place, and everything will be fine. And only risk what you can afford to lose. That's something that you need to keep in mind all the time. So have a lovely day today, guys. As I said, I'll repeat myself again, stay safe, and I'll see you tomorrow. Thank you very much, and bye-bye.